I want to tell a story about what happened in 2008 when the price of gold and silver did the unthinkable and it crashed right along the side of the stock market. And I use this image because this is what the sellers of gold and silver would have you think. Price of gold and silver going up at the same time, interest rates are rising, higher bond yields, rate hike fears. It's not true. Look, the last 6 months have told you. Precious metals are not going up when those things happen. You see, one of the biggest surprises of the 2008 financial crisis wasn't that stocks actually crashed. It was that gold and silver crashed too. And I'm warning you because a lot of people have all their money, and I warn people to sell while the mania was happening a few years ago. A few months ago, and when the market was liquid. Now people are trying to sell at these higher prices, and they're finding that they're being offered like 10, 20, even 30% under the spot price. I know it sounds crazy, but it's happening. You go online and go check it out yourself. Today, many investors assume that precious metals move independently from the stock market because that's what they're told by YouTubers. They buy gold and silver, and just, those YouTubers have affiliate links, and the owners of those gold and silver companies have a lot of money behind the scenes hoping that you buy their gold and silver. See, they buy gold and silver expecting protection from financial turmoil, and over the long term, that assumption has often been correct. But lies come out like, hey, silver and gold are an inflation hedge. Yet we've had heavy inflation with the Federal Reserve ever since 2022. And silver and gold have just decided to rocket off in the recent past. See, history shows that during the early stages of a major financial panic, precious metals can get caught in the same liquidation wave that crushes stocks. That is exactly what happened in 2008. As the financial system began to unravel following the collapse of Lehman Brothers, investors weren't simply selling bad assets. They were selling almost everything that they could. Hedge funds faced margin calls, banks needed liquidity, and investors desperately raised cash whenever they could or wherever they could find it. Even gold wasn't spared. During the height of the panic in 2008, gold fell from roughly $1,000 per ounce in March to near $700 per ounce by November. That's a decline of approximately 30%. And this information I'm giving you, I'm telling you right now, there are gold and silver bullion dealers that hate what I'm saying. They even launched an attack with AI after me because they were trying to perpetrate that China was running the price up. Yeah, they were in the futures market, but there wasn't a physical run like people think. There were old stock footage, all kinds of craziness that people are doing. And this is going to come out. It's going to come out soon. You see, silver during that time in 2008 was hit even harder. Silver peaked near $21 per ounce in March of 2008 before collapsing to under $9 per ounce a year later, and some of us took advantage of that. At its worst point, silver lost nearly 60% of its value. Meanwhile, the S&P was falling by more than 50%. For many precious metals investors, it was a shocking experience, but because YouTube and social media was so new, the masses didn't experience this. They're about to experience this coming up soon. And I say it with a smile because I've been warning people, and some people took profits, and we're about to race back in with a fire hose full of money. Cash. See, the thing that you were told by all those silver and gold YouTubers is trash? It's not during these times. You see, the common narrative had always been that gold and silver would protect investors during a stock market crash. Instead, both metals were falling alongside of stocks. Well, you may ask yourself what happened. Sorry, I get thirsty. And I don't edit. The answer lies in the understanding that there's a difference between physical demand and paper markets. That's what caused the price of silver to explode when the Shanghai gold markets. Stop talking about physical delivery. Stop talking. You can talk all this fancy stuff all you want, but in the end, it's a bunch of traders on the futures exchange running up the price using margin. And you knew it because the physical price wasn't keeping up with it because there wasn't lines out the door to buy it. There was lines out the door to sell it. You see, when investors buy gold and silver through ETFs, futures contracts, options, mining stocks, and leveraged products, and the mining stocks didn't keep up with it. I had some make 600, 700%, but that was a very long time coming, and that ramp up just happened a few months ago. You see, when they do this in these leveraged products, those assets become connected to the broader financial system. When a stock market experiences a violent sell-off, large investors often need cash immediately. They sell their winning positions. They also sell their losing positions and everything in between. Gold and silver futures become a source of liquidity for these guys, and that selling pressure can push paper prices sharply lower, even when long-term fundamentals remain strong. Oh, real quick, I got to throw this out there. I'm running a flash sale on the tax lien course, just the tax lien course so people can afford it, and it's a smoking sale. Links down below if you want it. It's going to end soon. That is an investment you need to go look at. When the government guarantees you a very high rate of return, a higher percentage that is triple, quadruple, or sometimes 8 times that of a bond rate in less than a year. Go take a look at it. But back to gold and silver. You see, ironically, while paper prices were collapsing in 2008, many physical dealers were reporting shortages, right? Because people were racing out while the paper price of gold and silver is collapsing. It was a great time to go buy physical. So people would race out. This time it's going to be the opposite. Not many people are going to have money to go do that. So when these dealers are reporting physical shortages, investors rushed to go buy those coins and bars. And then what happened is the premiums exploded. This also happened during COVID. In some cases, physical silver products were difficult to obtain despite the falling spot price. And let me again just talk about COVID. During COVID, the shortage became so insane, so intense, and yet the price, it was up, but it wasn't like it is now. They had to dealers were buying and taking delivery of COMEX bars, massive bars of silver, and selling them online. That has never happened in the, 15, 20 years that I've been investing in precious metals. But look at where the price went from there. It dropped. You see, these price raises don't always stay up. This one won't either. I know this is going to piss off a lot of people. Look down in the comments and watch all the people that are melting down, because there are people that have, first, a poor mindset. They don't have a lot of experience or understanding of capital markets and how these work. Dry mouth. See, the paper market back then was saying one thing, right? The physical demand, when it was falling, the physical demand was saying another. That's what investors need to understand, this true pendulum and how it works. Then something remarkable happened back then. Once the panic selling subsided and central banks unleashed unprecedented stimulus, gold and silver began one of the greatest bull runs in modern history. I was a part of that. It was epic. Ran all the way to $49 for silver. Gold recovered first. By late 2009, gold had regained its losses, and the stock market was actually still falling up until the spring of 2009. By 2011, it had reached approximately $1,900 per ounce. Silver's rebound, like I said, was even more dramatic on a percentage level. After falling below $9, silver eventually surged to nearly $50. It was like 48.90 or something like that. I don't remember the exact number. But that happened in 2011. Investors who understood the difference between a liquidity event and a fundamental breakdown were rewarded handsomely. Those are only the ones that sold. I didn't sell back then. I learned the hard way. Now let's fast forward to today, because the ninja learned his lesson. Many of the same warning signs are beginning to emerge, and I spent thousands of hours studying these markets. From 2011 till when I started a YouTube channel, I started studying like you wouldn't believe. Financial markets now have become increasingly dependent on ETFs, passive investing, leverage, derivatives, and institutional flows. And I'm going to blame a lot of YouTubers for that. YouTubers with millions and millions of subscribers that have no idea. They're so young. They've never been through a crash. They don't know what it's like. They all admit that their parents all lose their homes. They're still telling you that real estate's a great opportunity. That's why ETFs, because they've been gamified and all this crazy stuff through these different exchanges like Robinhood and others, why people want them. People are lazy, fundamentally lazy. That's why they lose more than they win. But I want you to understand, when large hedge funds experience stress, assets that normally move independently can start moving together. We've already seen periods recently in the last couple months, I've been pointing out like crazy, where gold and silver experienced sharp corrections even while economic uncertainty was increasing. Dude, this is straight up from one of these websites. Hey, gold and silver is going up in price while rising rates are happening, higher bond yields and rate. No, that's a narrative. It's not correct. but they want to sell you gold and silver. And remember, there's some silver products right now under spot. What is that? What should that tell you? There's no physical demand right now. We are on a thread. I'm not telling you to race out and sell your gold and silver. I did that when after it went over its all-time high. And I was saying, pull back your initial investment. People lost their minds on this channel. I'm never watching you again. Copy. Who's right now? Sure, the price is sitting at a high number. How much can you sell it to your coin shop for? I'd almost dare bet 90% of the people watching this couldn't get spot price. And that's not an insult. It's a clarion call. You see, if conditions are getting worse, why are metals falling? Right? Silver was over 100, 110, 120 bucks an ounce. Why is it in the 60s right now? Economic conditions are worse today than they were at the first of the year. You see, the answer is often the same as it was in 2008. It's liquidity. That's it. When investors need cash, they sell what they can sell. So what are you going to do about this? I think this hopefully has made a lot of people think. One thing I personally am not doing is buying more metal. I'm waiting for it to crash. Oh, and just so you know, I didn't sell any of my metal. I told people, if you've got a high concentrated amount of your net worth in precious metals, after it crossed the all-time high, pull back your initial investment. That truth and solid, amazing financial ideas, for lack of better terms, most people couldn't deal with that because they're emotional. That's why they buy lotto tickets. That's why they listen to these hype guys on the internet. You're going to find out. Some people in the gold and silver bullion industry, physical metals, went and attacked some people that didn't share their narrative, and they're about to pay the price for that. It's going to be really interesting. They pumped a false narrative using China as their excuse, and now it's redemption day. This is going to get exciting. Thank you to everybody that understands, uses a level head, and is a contrarian thinker, can think outside of their own narrative so that they can become more and more successful. If you want to diversify and you want to start learning about tax liens, I'm not joking. It is, I believe, the most amazing opportunity right now. If you want to learn about it, rather than spending literally thousands, if not tens of thousands of dollars on a course to do it, because it's very hard to get all the information so you can bid on these things at home. Links down below, stupid low price, because that's where I want to help more people than less. All right. That being said, the Economic Ninja is out.